Today we're going to talk about the benefits of FHA mortgages when compared to conventional financing. An FHA mortgage is a government-insured loan issued by HUD. FHA stands for Federal Housing Administration, and these are great loans for not just first-time home buyers, but really any buyer looking for a low down payment mortgage. And here are some of the benefits of FHA financing. For one, as I mentioned, a low down payment, as little as 3.5% with the traditional FHA mortgage, as compared to your conventional financing that would require 5% down unless you're a first-time home buyer. Two is the down payment can actually be a gift from a relative or a close family friend. This means that none of the funds actually have to be yours. They become yours once they're gifted to you by that individual. Three is that you can have a non-occupying co-borrower to help you qualify for the home. As an example, this is someone who wouldn't actually be living in the property. Maybe it's a parent or another relative who lives elsewhere, but you want to benefit from their income and their credit in helping you qualify to bring your debt-to-income ratio down lower. This would be a non-occupying co-borrower, and it's a great way for someone who doesn't quite have the income to qualify to get into a new home. You can have up to a 6% seller credit. This means that the individual who you're buying your home from is able to give you up to 6% towards your settlement costs. It can't go towards your down payment, but it can be used towards your settlement costs. So if you have a $200,000 purchase and you get a 6% seller credit, which is $12,000, that $12,000 should cover all of your settlement costs, meaning that you can get into the home for just the down payment. And reflecting back on the fact that that all could be a gift, you essentially can get into this home with no money out of your pocket. It allows for a higher debt-to-income ratio than a conventional mortgage. In a previous video, we discussed what your debt-to-income ratio was. This is the comparison between your monthly obligations and your monthly income. Well, on a conventional loan, you're pretty much capped at roughly 45%. Where with an FHA mortgage, you can go as high as 57%. This is really helpful if you showed a lot of expenses on your tax return that offset your income. It allows for shorter waiting periods for short sales, bankruptcies, foreclosures, and deed in lieu of foreclosure. This means that if you ran into a previous credit issue, as discussed in another video, the waiting period is much shorter than that of a conventional mortgage. It allows you to buy a new home sooner rather than continue to rent as you might be doing today. It's not just for first-time home buyers, which is the most common misconception of FHA financing. A lot of individuals feel that FHA somehow stands for first-time home buyer, which is not the case. It has to be your primary residence, meaning you're going to be moving into the property and actually occupying that home, but it's not just for first-time home buyers. So you can own a home now that you're planning to sell and move out of and still use FHA financing to buy your new home. It has less of an impact on the interest rates and the monthly mortgage insurance based on lower credit individuals. So if you're someone who might have had some credit issues in the past, your scores aren't up in that 700 or 740 range that a lot of lenders are looking for on a conventional mortgage. Well, with a lower credit score, you're not going to be hit with a super high mortgage insurance premium on a monthly basis and a super higher interest rate. You're still going to get those awesome low interest rates that are currently available in today's market, even with lower credit. These are just some of the benefits of FHA financing, and there's many more as well. So it's important that you reach out to your local lender and ask all of the questions you have pertaining to financing. There might be some more information available to you that I haven't discussed today.